right, a good afternoon, everybody. Uneducated Economist here. So in today's video, we are going to be talking about the inequality we are now facing here in the United States. It's not new. It's been ever increasing, ever growing, and the problem now has gotten to the point that it's really going to be irreversible, and it's going to cause a lot of pain and suffering for the majority of the people. And I'm talking like 80% of the people are going to suffer the consequences of this. To understand how new money comes into the system and separates the rich from the poor, it creates the inequality, is really the key to understanding what it is that's happening right now. Because ultimately, there's nothing that a politician or anybody else out there is going to do to reverse this. The only thing that can stop the inequality at this point is for the new money to turn off, and everybody will fall into pain and suffering if that was to happen. Most likely, the powers that be are not going to go down that road. They are not going to do the right thing and bring the inequality down by the ending of the new issuance of money and debt, or credit and currency, if you really want to talk about it. Listening to some of the things that the Federal Reserve is saying right now will give you a much better understanding of how it is that you're supposed to position yourself, because most people are completely confused and really very frustrated. Like, the frustration comes from the confusion, the misunderstanding, or the lack of awareness. This is really where the frustration comes from, because if you understood it, even if you don't like it, at least you are aware of the situation in a way that says, hey, I know what I need to do now, considering that the powers that be are not going to reverse the problems that I am now seeing. That's really how you deal with this. I'm going to play a short clip here. This is coming from Bloomberg. It's an interview with the newest Fed official, Mirren. I'm going to just play a short section of this. Here we go.
All of those things would seem to suggest that this is an economy in trouble. Not so, according to the economic data released in the last hour. It showed the U.S. economy growing at the fastest pace in nearly 2 years, thanks to consumer spending, though apparently not on used cars.
All right. Fastest pace in 2 years due to consumer spending. Very interesting to think about, because the consumer is not the majority of the people. That's not the majority of the people. People hear that. They hear consumer, and they think, okay, that's everybody going out there and making purchases. Okay, well, that's true to an extent, right? The average everyday person is most likely going out there and buying what it is that they absolutely need, with very little expenses or very little money going into luxurious expenses, unless they have committed themselves to student loans or car loans or something of that nature. But their paycheck is not going to increase the consumption coming from 80% of the people. The increase in consumption is coming from the top 20% of people. Now, they don't explain that. We just understand that from the research that we have done and understand how the Cantillon effect works. Not too many people out there discuss it. Not too many people go out and explain how it is that the separation is really taking place due to that new money. But listen to what Mirren has to say.
Fed Governor Stephen Miron spoke to Bloomberg ahead of that data on the next steps for the Fed.
My view is not one of enormous economic pessimism. I don't think
not one of enormous economic not downward looking on it, right? Pessimism. There we go. And now I think to myself, how can you not see it? 80% of the people suffer. Right? So 80% of the people don't earn enough. They can't go out there and buy a house. They hardly have enough to make it through the end of the month. And he's not feeling pessimistic about the economy right now. I wonder why. It's because these people, the powers that be, the central bankers, the politicians, everybody else, is focused on the consumer. The consumer is the top 20% of people. That's why he's not concerned about it. He's not concerned about 80% of the people. He just literally just straight up said it. This is why most people don't understand, or they feel the frustration. That's really what it comes from. It's not like they don't understand. They feel the frustration, and it really comes because they hear things like this, right? They think, okay, so the economy must be doing well if this Fed official is saying that he doesn't see very much he's not very pessimistic, right, about the economy. And I think to myself, well, yeah, if you're focused in on the top 20% of the people who are increasing their consumption, then yeah, you're doing a great job, bro. But 80% of us out here are suffering the consequences of this action, and he's not concerned about that.
economy is about to crater. I don't think the labor
consumer spending, though apparently not on used cars.
I just rolled it back a little bit.
Spoke to Bloomberg ahead of that data on the next steps for the Fed.
Listen to him.
My view is not one of enormous economic pessimism. I don't think the economy is about to crater. I don't think the labor market's about to fall off a cliff. However, the neutral rate is drifting down. And
something else, the neutral interest rate is drifting down. Now, most of the time, when we think about the neutral interest rate, we really think about that going up based on the inflation expectation. But ultimately, other than the short time period from COVID till about now, the neutral interest rate has never risen. It was always falling. What Myron is saying is that neutral interest rate is now falling again. Now, if we think about that, if the Federal Reserve is sitting here somewhere and the neutral interest rate is falling, that is creating more restriction in the economy. You think that would be felt by the 80% of the people suffering with job losses, suffering with the inability to go out there and find another job that pays higher, finding anything out there to start a business. In this environment, this is incredibly difficult. When you have more restriction on the economy, it's very painful for most of the people. 80% of them. Not the top 20%. They don't feel the pain the same way.
And as a result of that, it's incumbent upon policy to adjust in response. And the longer that policy stays excessively restrictive, the greater the risks to the downside for the economy.
All right. So now when I think about what he had just said there, the greater the risk, the downside for the economy is, the greater the risk is the downside for 80% of the people out there. When they lose their job and have no ability to go out there and acquire the money that they need to pay their bills, they suffer the most. All right? They suffer the most from this. The top 20% of the people feel inconvenienced. Very different feeling. All right? So here we have a situation in which that there's literally nothing that they can do to create a better environment for 80% of the people, while at the same time focused in on the top 20% of the people, increasing their consumption, and then facing a fact that the neutral interest rate may be low, may be falling, creating more restriction within the economy that ultimately results in job layoffs and less labor market favorability. All right? This is the situation we're in. This is a two-tier system that is obviously separated, right? You got the top and you got the bottom. And the top are loving it. They're doing just fine. They're increasing their consumption. They're getting a ton of return on their capital investments. And the bottom are suffering the consequences as their little bit of wage increase they have has not increased their ability to consume. In fact, that's fallen. And at the same time, in order to deal with the fact that we have a restriction within the economy, you find even more layoffs and more pain and suffering to those 80% of the people. I don't know what they plan on doing. There's like literally nothing that they can do at this point. You lower interest rates and you're going to send money to the top 20% of people, especially the top 10% of household incomes. If you keep it elevated, you're going to create more pain and suffering down in the bottom 80%. Right? What could possibly happen from this other than more inequality?
I wonder if you would still call it as restrictive with this latest batch of data in hand. Joining us now is Michael McKee, Bloomberg International Economics and Policy Correspondent. Mike, can we talk about the data? Jobless claims, GDP, what did it show?
Basically, it shows it's a tough day for the Trump administration because on the one hand,
I love how they just immediately takes it to political. Like here it is, they're talking about the Fed, talking about what it is that they can do with their interest-rate policy, all the monetary policy, and immediately, boom, let's take it to politics. Right? Let's take it to a political atmosphere.
and they want you to believe that the interest rate should be cut significantly. But the data are telling a totally different story, one that the administration could embrace, because as you mentioned, we get strong GDP growth and we have this odd situation that the Fed's been talking about, low hiring, but low firing, with jobless claims falling to 218,000. Durable goods orders were up.
You guys, wasn't that good? Oh, I mean, you got jobs, plenty of jobs. See, yay, jobs. I'm sorry, did those jobs pay any kind of wage that is going to be like beneficial to the people out there? No, but you got them. Yay! Good job, Fed. Good job, politicians.
2.9%, and as part of GDP, the increase in GDP, we saw an increase in business spending overall. Now, durable goods is interesting. You're talking about Intel, but computers and computer chip orders were down during the month. Even though we saw a big increase in durables, it was mostly airplanes. The trade good balance shows the effect of tariffs, 85.5 billion, because imports fell by a huge amount, over 4% in July, after rising significantly because basically we saw people pulling forward expenses. As you mentioned, GDP up 3.8%, revised up from 3.3. Consumer spending pushing that higher, business spending pushing that higher. So where do we go from here? Well, we know where Governor Myron is, and now we're beginning to see where more members of the Fed are. We have a lot of Fed speak today, and the first three have been out. You heard from Myron. Austin Goolsbee a few minutes ago saying he's not sure they should front load rate cuts given where the economy is. And
I love how they talk about it. They should not front load rate cuts considering where the economy is. Well, that's exactly what they did. Like, straight up. I mean, they were just basically telling the people right after the last Fed meeting that there's more promises to come, more promise of rate cuts coming, and all these Fed governors came out there. The people internalized that. They're maybe second guessing it now, but at first, that's exactly the message that they were told. Right? See, this is what I found so amusing about this whole communication style that is now coming from the Federal Reserve. I had an individual tell me, it was like in a comment, they were like, please, man, the Federal Reserve is being reactive to the bond market. And I'm thinking, there is no way in the world that the bond market is not reacting to the Federal Reserve's credible threats. There is no way in the world the bond market is not reacting to the Federal Reserve's credible threats. The Fed is not reacting to the bond market. The bond market is reacting to the Federal Reserve's statements that they are making. See, the good example of this, you can look back. Let's just set this stuff aside for a second. Let's look back to before the Federal Reserve started raising rates. Here we had COVID, we had recession, we had the lowering of interest rates to zero or pretty close to zero in order to stimulate the economy. And then an announcement came out that said at the beginning of the year, not talking this year, we're talking 3 years ago or whatever it was, almost 4 now. They were talking, hey, we are going to start raising rates at the beginning of the year, months before they actually did it. Now, before they moved, mortgage rates started to tick up in anticipation of what it is that the Federal Reserve was going to do. The moment that the Fed started cutting rates, mortgage rates shot up to almost their high, shot up to like 7-8%, and then plateaued off and stopped going up while the Federal Reserve continued to increase the Fed funds rate. A lot of people said, look, the bond market has now separated itself from the Federal Reserve and is acting independently. Okay, that's true. There's a bunch of investors out there who buy into mortgage-backed securities. When you buy into a mortgage-backed security, that is the market finding the price level that they are looking for. When the mortgage-backed security falls, the yields go up. So the mortgage rates are found from the market buying into mortgage-backed securities. Can the Fed manipulate that? Absolutely they can. Quantitative easing proves that. They can lower interest rates within the mortgage market by buying into mortgage-backed securities. Now, the moment that they start to step away from that, it is up to the market to find that price level. When those bond prices, when those mortgage-backed securities begin to fall, the yields going up, eventually the investor says, that's my price right there. It goes any lower and I'm in it, right? When they buy in at that price, the yields stop going up. As all these people thought, man, the Federal Reserve is going to step out, they're going to go into quantitative tightening, you're going to see mortgage rates go up to 15%. There was never an investor in the world who was going to allow that to happen. They were going to buy in before that ever took place, and that's exactly what ended up happening. So as the Federal Reserve was promising increased interest rates on the Fed funds level, the market itself found where it was that they wanted to be in order to get a return on those mortgage-backed securities, and it didn't have anything to do with the Federal Reserve. Okay? The Federal Reserve said, hey, we're going to get out of this game. We are going to go into quantitative tightening. Okay? Everybody lost their mind, and then the market found that price level. They acted independently of the Federal Reserve, only based on the Federal Reserve's credible threat of quantitative tightening. All right, so understanding how it is that the markets are reacting to the Fed's statements and the promise of what it is that they are doing into the future, that is the monetary policy, not the Federal Reserve adjusting rates. By the time you look at that, it's too late. Okay? And this is something that we are witnessing today. It's one of the reasons why I feel that Miron wanted to cut rates, or Myron, or whatever you want to call his name. Myron is his real name. One of the reasons why he wanted to cut as much as he did is because he is viewing the neutral interest rate falling. Now, most of these Fed officials have been looking at the credible threat of tariffs elevating, or at least keeping the neutral interest rate elevated. However, the inflation is coming down, not to the target, but pretty close to it, 2.9. That's like not too far off from the 2%. I mean, is the Fed got it to 2% target yet? No. But then again, never in their history has the Federal Reserve ever been able to get to a 2% target. Not one time. Right? So for people to say, oh, the Fed is trying to get to 2%, maybe they're trying. They ain't going to do it. They never have. And there's no anticipation to think that they ever could. Right? But they can certainly lock in a 2% long-term inflation expectation, which is really what really ended up happening, and then maintain inflation that is either moderately above or below 2%, and maintain that 2% average inflation rate over time. Will the Federal Reserve attempt to get inflation down to 2%? Sure, I believe that they will attempt to get it there. Will they maintain 2%? Not a chance in the world. Not a chance in the world. Because there has never been a time in history that they were able to do that. All right, let me go check out this super chat here, guys. Thank you so much for being here. We got 204 people watching. Go hit that like button, share the video. Let's get a bunch of people up in here talking about this for the next 15, 20 minutes. All right, we got Infamous NYC with the $10. Thank you so much. Even many of the travel nurses I work with complain about costs, yet look at me crazy for sleeping in my truck and investing while they buy Uber Eats every shift. Yes, I buy Uber stock and DoorDash. See, now this is exactly it. Thank you, Infamous NYC. I really appreciate all the support you have for the channel, man. It's just been great. But I totally agree. Like, I witnessed that myself. I bring my lunch every single day. You know, Sarah makes me the sandwich and she packs me a lunch and she loves doing it. She does it for me every single morning, and it's just a beautiful thing that she does that for me. And I save a lot of money by bringing my lunch to work. A lot of these guys that I work with, they go out to eat. Like, they go to the restaurants, they go to the, you know, fast food places, they go to whatever, and they buy this food. And I think to myself, man, every single day, it's like $10, $15 at the bare minimum that you're going to go out there and get something to eat. And then on top of it, if you're buying that for lunch, then most likely you're probably buying some of that for dinner as well. And maybe not every single day, maybe you cook, but most likely if you're buying your lunch, then you're probably buying, you know, going out to eat as well. Preparing your own food saves an insane amount of money, like so much money. Driving old cars saves so much money. These are the attitudes and mindsets that I have taken in order to acquire what it is that I feel I need to provide for my family and to hopefully provide for myself when I'm, you know, in that retirement age. If I was to eat out every day, if I was to have a new truck, I would not be able to do any of those things. See, I love how people were kind of reacting to the Toyota that I was driving over the last few videos. That's my dad's truck. He had been out of, you know, he had traveled for a little bit. He let me borrow his truck while I had the Explorer in the shop getting no 2 sensor replaced or whatever it was. He let me borrow the truck. The audience lit up. Oh, look at Simon diving into luxuries, going against everything he said. I was just like, it's my dad's truck. I'm literally borrowing it, right? But understanding how it is that you can position yourself in order to have the best outcome really means cutting back on some of those pleasurable experiences that you would get from eating out or driving new vehicles or anything like that. When I set that stuff aside, when I don't have importance put on that, I have the ability to then acquire things in my life that people say, oh man, you're lucky for having that. And I'm thinking, well, you drive a new car, you're pretty lucky too, right? I mean, I'm lucky because I have a little bit of a savings, and you're lucky because you drive a new car, right? Who's more lucky? You know? All right, 80% need to sew their cash into their clothes in the closet. I love it, Rebecca. Thank you for the comment. Whoever made all these choices, that is their debt. I had nothing to do with this. Yeah, I agree. See, like, I think about that when it comes to the student loan debt. You know, all these student loans are like, hey, this is such a burden. I can't handle this. This is keeping me from actually advancing in life, man. I need a relief from all this debt. And I'm thinking, man, that would definitely help you out. What do I get? Like, I didn't go to college. I didn't take on student loan debts. I don't have a degree. I don't have any of those advantageous things that come from going to college, except for the burden that comes from having the student loan debt. But you want the advantages without the debt. Well, I didn't get the advantages and I don't have that debt, but how am I going to get rewarded, or how do I get reimbursed? How do I benefit from this? I don't. I literally don't. In fact, it's going to be a burden on me because now I have to take my efforts, my energy, and everything that I do to try and acquire money, pay taxes on it, which alleviates that student loan debt. I think to myself, man, how come it is that I had to work as hard as I could without a degree, without inheritance, without anything that goes on, so that I could have the position that I have today, only to watch somebody else who got a degree from student loan debt, who can't face the facts that they have to pay that back, and now they get to benefit from that decision that they made? Like, man, what do I get out of that? Right? I mean, I guess I get to live in a society that doesn't have the burden of debt on people who have degrees, so that they can provide me with better services from their degree that they earned. Like, is that the way I'm supposed to look at it? I don't know. Pay your debts. I had to pay all mine, all the credit card, all the medical bills, all that stuff. You know, I mean, it was difficult. When you have no money, $20,000 in debt, no hopes of any idea of what it is that you're going to do to try and pay off that debt, and then you start figuring it out one day at a time. Like, okay, I'll walk to work and I'll take this $20 bill that I have and go down and make a payment on my $9,000 of credit card debt. Yeah, that's what I did. I did that every single day for years, cut back on as much expenses, and then took whatever little money I had and would go down there and pay on my credit card. Literally, I would walk $20 bill down to the grocery store, because that's where my bank was at the time, and put $20 on a $9,000 credit card debt. Right? The more I did that, the more I realized my subconscious was picking up the idea that I wanted to be out of debt and I wanted to be in cash flow, and I started positioning myself to do that. Every day I would try to figure out some place that I could go to try and get a little bit more money, and every time I got a little bit more money, I would deploy that to paying off my debt. I did that for years and years and years. It took forever, it seemed like, forever to get out of debt. The moment that I did, everything changed for me. Not only did just the demeanor of the way I was presenting myself elevated. Like, all of a sudden I wasn't as frustrated, and I was somewhat happy with things that were going on. I didn't feel like there was consequences to being in a working class. I thought, man, no, this is awesome. I have a good job. I have no debts. I have the ability to acquire. And to me, that changed everything. Not being in debt is huge on the psyche. In fact, it's pretty much everything. The moment that you get out of debt, everything starts to flip and change. If you're deep in debt, hundreds of thousands of dollars in debt with no hope of ever getting out of it, I don't know how you're going to live your life, because to me, that would just be overwhelmingly depressive, right? When I got out of debt, that's when everything got better. Yeah. And it didn't matter. I didn't have a degree. I didn't have business. I didn't have any of that stuff going on, right? I just got out of debt, kept my expenses low, figured out that cash flow, and that's what started to do it. Right? You don't need a degree to make that happen. You just need to be in the right mindset. All right. Hey, chat, what does America have? Why does America have police institutions? Why having a right to bear arms? Well, I think that's pretty simple, right? Like, you have to have a police force in order to govern the people. The right to bear arms is just that. It's a right to do it. Not everybody does, and not everybody wants to carry firearms. And I'm a total believer in the constitutional rights. I'm a firm believer in the Second Amendment. I personally own firearms. I know how to use them, but I don't want to carry firearms with me. I don't want to open carry. I don't want to concealed carry. I don't want to carry. Right? That is not the position that I want to be in. I don't want to feel that way. I don't want to have to think about that. I just don't want it. Not for me. But I love the fact that everybody else does. Right? Not everybody, but a bunch of people. And I know people who conceal carry. And when I know that I'm hanging out with somebody who conceals carry, I feel much better. Like, I don't feel worried about that. I feel better when more people have firearms. I know that seems weird for a lot of people to try and understand that or internalize it, but that's literally the way I feel. Right? I don't want to have to carry. I don't like the idea of it. I just don't, right? I mean, out in the woods, cool. Out hunting, absolutely. Being prepared at home, 100%. But when I'm walking the mean streets of Astoria, I don't need to be carrying. Right? It's just not, doesn't make any sense. But I love it when other people are, because it makes me feel that much safer. Question: are you still buying nail? Okay. Go back. What is it? Go back. Thank you so much for the question. Here, I'm gonna give you an answer on that, and then I'm gonna let it go, just to make sure that I'm very clear on it. I do not want this to be an investment channel. I do not want you guys listening to me for an individual stock pick so that you can try and make money off of the information that I am delivering by giving you a specific stock to buy. That's not what I really want to avoid that, right? So when I say that, I really want people to do their own research and do their own stock picking, right? Not to listen to me for it, right? Maybe listen to me for the underlying economic forces that then help you make that, inform that decision. But listening to me to try and buy a particular stock and make money off of it, I think is going to be very dangerous. Right? Now, with that being said, I am out of nail. Okay? Now, will I get back into it? Maybe at some point. At this point, I am not. Right? Now, I did mention that at one point in a video. I don't know how many people heard it. But I do not want people thinking, well, I'm still holding on, waiting for you to tell me when to sell. Right? That's the dangerous part that I was wanting people not to do. Right? Or buy because of my information. Like, don't do that. Go do your own research and then form your own decision. Right? But I do think that nail has room to move. Right? But very dangerous, 3 times leveraged ETF. And if the underlying, because, ultimately nail is a 3-time leveraged ETF with, following the home builders and building suppliers. If that home builder stock doesn't continuously rise, then nail will fall. Okay? You have to understand there's a deterioration to it. So even if the underlying asset was to maintain and stay flat, nail would continue to fall. The only way nail will go up is if the underlying asset continues to rise. Very dangerous situation to be in, right? All right. High schoolers would go to school with rifles in their trucks when I was growing up. I did. I did. I mean, I brought rifles and shotguns to school because we were hunting after school. And it wasn't a big deal. Like, you would see them in the back windows of pickup trucks. It wasn't, nobody cared. Hard cause, that's pretty much right. Few here are willing to be responsible enough to police themselves and hold the police accountable. Do you think food prices will keep going up? I do. MRider777 is probably going to be the worst thing for most people. Like 80% of the people are going to suffer the most due to the fact that the food prices are going to continuously rise. You have to think, food is a global commodity. Right? It's not just, I mean, we produce a lot of food here in the United States, but we also import a lot from other nations to have the variety that we do. Food is a global commodity. And now we here in the United States should have plenty of food to eat. Like the food will be here, but because the demand for it outside of the United States will be so high due to the shortages that are going to experience in certain areas, because of the demand for food is going to be so high that here in the United States, the prices will be very elevated. Even though there's plenty of it, the price of it will be very high, and really only people who are going to not feel the pain of that are going to be the top 20% of people. See, the bottom majority of the people spend most of their food on like shelter, energy, and food. Right? Like those are the things. They don't really spend their money on much else. Like they do buy the occasional clothing or some kind of toy or a luxurious experience or something of that nature. But most people are going to spend it on housing. They're going to spend it on fuel like gasoline or electricity, and they're going to spend it on food. And those three things are going to be very, very expensive going into the future. Right? It's funny to think like oil is now at less than $70 a barrel. But I'm looking at a gallon of gas here at my local place at $4. Now, I do live in an expensive area for gas, and it always has been. So the gas here is much higher than it is across the nation. But to think, $4 a gallon, like I drive a Suburban, right? Like this has a 42-gallon tank. At $4 a gallon, this thing will take well over $150 every time I fill it up. So yeah, like I can't imagine somebody who's just like trying to use this as their daily driver, and have like their paycheck is barely making to the end of the month. This vehicle, like if you got gas prices go up, that's it. It's gone. All your extra money, all the money beyond the money you're already making, that's it. It's gone, right? So if food prices go up, gasoline prices go up, rent continues to go up or just become still a burden on them, what is it you're going to do, right? Like, that's it, man. You're out of the game. It's going to get tougher and harder from here on. The wages will not keep up with any of that. Okay? The only way to deal with that is to understand that I can cut back on expenses somewhere, somehow, some subscription, some expense, trade the Suburban in for a Toyota Corolla, something of that nature to be able to get your expenses low. That's really the key to it, right? And then increase your flow, your money that you're getting in. I don't know what it is that the politicians can do to fix that. I don't know what it is that the central bankers are going to do. I mean, I've heard plenty of times people would say something, if the rich were really, if they wanted to, they could be helping out, they could contribute, they could donate, they could do all this other stuff. And the people I hear saying that really never volunteer their time to do anything to help anybody else. Like, are they going out there and volunteering to serve lunches to the homeless? Are they doing anything to help the less fortunate than they are? No, they're blaming the rich people for not helping them, right? Just like everybody else, I mean, it's just the way it is. There is no correcting that, Need a new pet CD? Let's see here, 3.08 a gallon in Colorado, San Luis Valley. I'm not worried about any of this economic failure, inflation, etc., as I have physical 67 ounces of gold. Oh, wow. And 2,000 ounces of silver, no debt, and I am saving $4,000 every month. See, now that's a condition that the top 20%, 10%, like that's the condition that those people have on the upper level, right? The majority of the people don't have that option. And like even the idea of just being able to save in a silver bullion or something, like coming up with $50 in order to go out and buy a silver, and probably a lot higher than that today, But to be able to come up with that money to go and buy even a single ounce of silver may now be a burden to the majority of the people. Like there was a time not too long ago, like even the average everyday person could go down and take 20 bucks and, buy an ounce of silver once a month. But now, even at, double the price from that, it's getting to a burden. To drop $50 on anything is difficult for a lot of people. Like even me, when it comes every Thursday, I try and buy $50 worth of Bitcoin. And every time I do it, I'm thinking, man, should I be buying now? Should I wait? Even though I'm dollar cost averaging into Bitcoin and it wouldn't change anything about my position except for adding a little bit more to the holdings of it, I still question that. Can you imagine if it's the only $50 that you have for the next 30 days? Like this is all your extra money. How likely are you going to go down and put it into silver? Probably not. You'd probably just hold on to the cash and hoping that you don't have an emergency that requires you to put that out there, I mean, that's the way that most people are living. All right, an average cigarette habit is 70 bucks a week. My goodness. Man, I think, that was like, as much as I would spend on weed, probably more. All right, 90 pounds in each hand. Hard cause, I respond twice to you, but comment got blocked. Huh, interesting. All right, everybody's one emergency away from being broke. MRider777, absolutely they are. When I heard that the average American could not come up with $400 in case of an emergency, I thought, whoa, is that right? Couldn't come up with $400 in case of an emergency. I thought, dang, I went and got $400 for every member of my family, and I took it in cash, and I held on to that for a while. I put it in the bank, but I thought to myself, man, I don't want to be one of those statistics, right? So that's what I had done. But it's amazing to think how broke people really are. And really, when I look out there and I see the vehicles that people drive, and I'm thinking, man, those are nice cars. I wish I had a nice car. But then again, I'm glad I don't have the payment. So when I hear people complaining about money, I'm thinking, oh yeah, that's right. You got that newer car. That's probably reasonable for why you're complaining about money, because new cars are expensive and they drain a lot out of you. All right. Infamous NYC, thank you again for the $5, man. Most people are not poor due to industrious people. Even with my own family, I try to push them. All these kids just want to live big and not work for it. Yeah, I can kind of agree with that. Even like when I was a kid, if I had some money that was sent to me in the form of a check or something like that, I would be very anxious to get that money cashed. I would look for it. It was just like, hey, can we get to the bank to cash this check? And now I think about it, my kids, they were given they were each given some money in a check, and we put a magnet on the fridge, we got the checks there. Next time we go to town, we're going to go and deposit it for them. But they're not worried about it, right? They're not looking at it and say, hey, Dad, can we go get this money? And I got to thinking about it. Both of them have a little bit of cash. Anytime we ever go to the store and they want something, I'm like, well, do you bring money? And yeah, I got my own money, Dad. And I'm thinking, man, how are you guys able to do that? How are you guys in this sort of mindset that you're able to hold on to this money? Okay? And it's because it's not like I'm giving it to them. I mean, they're literally holding on the money from their birthdays or Christmas or whatever. And when they get it, they understand what it is that they are doing with that money. Now, don't get me wrong, they like going buying toys and, buying little frivolous things or whatever with it. But it's not like they have a misunderstanding of what it is that they are doing with their savings. They understand that they have money that they are not touching. And I thought, man, that is really cool. And they must have just picked that up residually from me, because I never taught it to them. They just do it, and I think, man, just doing it like that is cool. I've got it in their subconscious that's how they do it. I remember one time Freddie came to me and he says, he's my youngest, right? He was 7 years old, 8 years old. How was he? He was probably a little older. He's probably 8 or 9 years old at the time. And he comes to me and he says, Dad, can I have a $100 bill? And I'm like, no, you can't. I'm not giving you $100 bill. And then he has money in his hand. And I'm like, oh, wait a minute. You have $100? And he says, yeah, I would like $100 bill. I'll give you $100 if you give me $100 bill. And I'm like, why do you want the 100? I thought this. And then it dawned on me, he's trying to save. See, he knows that if he has 5s or 10s or 1s or even 20s or whatever, he will spend that. But if he had a $100 bill, he would keep it as a $100 bill and he wouldn't spend it. In his mind, he was saving. He was converting his smaller bills into one bigger bill, knowing that he would hold on to the one bigger bill and not spend it. And I thought to myself, man, I'm getting through. I'm getting through to these kids. They understand. He knows what he's doing, you know. And so sometimes that I get a little like, you know, oh, dude, you buying baseball cards again? You know, because he has just thousands of baseball cards. But that's his thing. Like, that's what he enjoys. And, you know, it's his hobby. And so I have to remember, like, you know, when you have a hobby, sometimes that costs money, right, to enjoy it. My hobby is studying economics. You know, his hobby is collecting baseball cards. Infamous NYC, thank you again, man. You don't fully see how it will end. Like Jesus said, forgive them for they know not what they do. Yeah, and that's really true. All right, less is more, dude. Less is more. Poor mouthing could save your life. 2 stock running, waiting on release of GTA. I buy an ounce of gold. That's a lot of buying power. I'm not going to want to convert again. Yeah, and I agree. That's every single time I ever put money into Bitcoin, that's something that I think of too, because I don't cash out of Bitcoin. It's a one-way street until I have 1 Bitcoin. And I don't even know why I'm trying to go to 1. I mean, I'm just put it in my head that I want 1 Bitcoin. So that's kind of like the thing. Like, once that $50 goes in there, that's it. It's never coming back out. You know, and it'll, like, not for me. Maybe someday, you know, down the road or whatever, if I give it to the kids. But for me, like, I don't have any expectations of ever taking it out of there again. So it's just like, it goes into there and that's that. 1 Bitcoin will be 1 million. That's your inheritance for your kids. Yeah, and that's kind of what I thought with the silver when I initially started buying into silver, was like, hey, I need something to provide for my kids. In fact, I had money that I had saved for my oldest son, and I was going broke. Like, I was losing my house, I was no job, I was like, it was like this money was going to end up getting spent. And I had to think, oh man, I got to go somewhere with this money for my kid. And that's when a buddy of mine says, hey man, you should consider silver. I never bought silver before that. I went down, bought 1 ounce of silver, and it was on, man. I was down there like every weekend buying silver until I had essentially put all those thousands of dollars into silver bullion. Here's the problem at the time. It was during the great financial crisis that this was taking place. And so as I was buying into silver over the course of the few years, I'm buying and silver's going up, and I'm getting very excited thinking, man, I did the right move. I'm watching silver go up to $50 an ounce. It was 2011, and I'm like, God, I'm the smartest person in the world. Silver is going to go up even higher. Dollar's going to crash. I'm going to be able to buy houses. Everybody should have listened to me. And then it went from $50 all the way down into the teens, and now I couldn't get my money back out of the silver. I was completely under. And I thought, man, what the hell did I just do? I dumped all this money that I really couldn't afford into something that is now worth half of what it was that I had paid for it. And I was so bummed out about that. Like, I got kind of angry about silver and all the silver pushers out there and all the people out there who talked about how it was going to protect your wealth and all this other stuff. And I just wanted to knock them in the teeth. You know, and I'm thinking, here, I'm foreclosed on my house. I have nothing. I have massive amounts of debt. And I got this box of silver that I paid twice as much for what it's worth. This sucks. I thought, man, I'd screw those people. And then one day, right, I had no vehicle to get to work. My car broken down. I had no credit. From nobody, not credit for financing. I didn't have credit with family. I didn't have credit with anybody. Right? But I did have that box of silver. And I remember calling up my buddy, who actually I talked to earlier today about silver. I called him up and I said, hey man, you still got that Tahoe for sale? He says, you know, I said, you gonna trade silver for it? He says, absolutely, I will. So will you drive it up here? He says, see you in a few minutes, bud. He drove up there. I handed him 165 ounces of silver. He signed that title over to me, and I was driving. And I thought to myself, man, I will never, ever, ever be without silver. Never. It is the greatest insurance policy you could ever have. Through all the failures of my life and everything that I had screwed up, that box of silver saved me. Oh yeah, I like silver, right? And so I buy silver as often as I can. I don't buy when it's at its all-time high, but when you find that the buying opportunities presents itself in silver, load up, stack it up, right? I mean, you think about it, it's not even at its all-time high yet. It's close, but it's not there yet. The all-time high was set back in the early 80s. It was hit back in 2011, and here we are approaching it again. Silver's cheap. It's cheap compared to gold. It's cheap compared to history, right? Even at $50 an ounce. What time is it? Okay, guys, I got to go. Thank you so much for being here today. We got 260 people watching. Thank you so much for everybody joining in on today's live stream. Take a moment and hit that like button by hitting the thumbs up. We will get this YouTube algorithm to spread this video around even more, so we can share the information and share in the conversations. So I appreciate everybody hitting that like button. I appreciate everybody who has shared the video. Sharing the video is probably one of the best ways you can help to support the Uneducated Economist, because when you share the video, YouTube wants to share the video. When you like the video, the algorithm picks that up. When you comment, when you participate and show activity within the video, YouTube likes to spread those things around. So I appreciate everybody who is supporting the Uneducated Economist by simply being here, watching, commenting, sharing, and hitting that like button. Uneducated Economist, you guys let me know. And thank you, Infamous NYC, for all the support for all the years. I can never thank you guys enough. All right, Uneducated Economist, you let me know.